So she mentioned how to manage multiple accounts, meaning if you have a longer term account versus like a short term account. So what are some simple approaches? So for most people, if you're working corporate job, you're gonna have a 401k. Regarding that long term account, if you're checking that account more than twice a year, it's probably too much. You set that account up once, pick the lowest S&P fund that's available, and just set it and forget it. You're not really trading that account.
Bennett,
Yeah.
every time the market ticks highs, I check my long-term account. Is that good? When I see the market ticking highs, I'm like, oh, let me see that Vanguard. Oh, we're popping. Right, so check it twice a year.
Yeah, so no, but again, your SEP is a little different. So again, for 401k, once a year, that's probably the most you should be doing. You really shouldn't be changing that at all. Just again, leave it in the lowest cost SP fund, keep it as simple as humanly possible, and then we get down to the two that most people can actively watch much more frequently, like you just mentioned. And we'll break this down into your IRA, your SEP, traditional or Roth, and then your taxable. The taxable account is one we lean more towards that being like a long-term account from a tax standpoint. Again, that if you're checking it, once a week, once a month, that's probably enough. Anything more, when things are going in your favor, you're going to want to try to get cued and start selling some of those winners. When it's a longer-term account, you should be really looking down the road. With the more aggressive account, that's like our IRA, the Roth IRA, the SEP. Those are accounts that we trade because we have a tax benefit. Where if Shake's making $100,000, $200,000, $300,000 a year, and he's making it in his SEP IRA, he doesn't owe Uncle Sam anything. Doing this is taxable, he owes Uncle Sam a check. But again, this works for people that are making money every year. If you're not, you want to do that reverse. But again, the more aggressive accounts, you're more likely to check, daily, every couple of days or weekly. The longer term accounts, the less you can watch them, the better they're going to perform, because you're going to have less times to make mistakes. So hopefully, Gina, that helped answer some of your questions.